Yeah, I'm just going to close that. No, but in all seriousness, so tech stocks in particular have taken a breather recently. So I thought this was a good moment to pause and reflect. So if you're newer to investing, this is the other side of the market that potentially you've experienced less of if you joined, say, after the tariff drop last year. Um, since then, tech has, you know, been pretty much plain sailing for a long stretch of time. And to be clear, we're still not far off all-time highs on the S&P 500 and even the Nasdaq, but um, pullbacks like this are normal and to be expected. But one important thing to understand is how your portfolio reacts to volatility. So if you're mostly in diversified ETFs, you're generally more shielded thanks to diversification across, sectors or different regions. Now, individual stocks can move a lot more, both up and down. And, you can hold both if you want to. But if you do, it's about sizing them in a way that matches your risk tolerance. So, a key question could be, are you genuinely comfortable with the volatility that your portfolio is exposed to, right? The answer is yes, that's a great position to be in. If not, and you notice price moves making you anxious or reactive, that can actually be useful information. It might mean, your portfolio needs adjusting slowly over time rather than reacting to short-term moves. And as always, only invest money you don't need in the near term. That rule never changes. But yeah, no one knows what happens next. The market could bottom in 6 days, it could bottom in 6 months. But what matters more is that you're prepared for different scenarios, you understand what you own, and you have a long-term plan of consistent contributions that you can stick to so that short-term moves don't push you into emotional decisions or anything like that. So yeah, that's just my perspective. Hopefully it's useful, and I will see you in the next video.